3,000% in 12 months. One stock. Not a crypto token, not an AI hype play with no revenue, a real company with real earnings that people completely missed, and it just became one of the greatest stock runs in S&P 500 history.
I'm going to show you exactly which stock this is in just a moment, but first I want you to understand why it happened, because that's what's going to tell you whether there's still money to be made here. Because here's the crazy part. Analysts aren't running away from this stock after a 3,000% run. They're raising their price targets. Bank of America, Evercore, Wells Fargo, all of them still bullish, still buying. So what is going on? And is it too late to get in? The stock is SanDisk, ticker SNDK. And yes, you probably know this name from the little flash drive sitting in your desk drawer right now. That same company, the one that makes USB sticks, just became one of the hottest AI infrastructure plays on the entire market, and most retail investors still have no idea why.
Here's where the story starts. February 2025. SanDisk gets spun off from Western Digital and starts trading independently on the NASDAQ. At the time, most people shrugged. Another storage company. Boring. Except, something was about to happen in the AI world that would turn boring storage into the hottest commodity on the planet. Because while everyone was laser focused on GPUs and NVIDIA, and look, fair enough, nobody was asking the obvious next question. Where does all the AI data actually live? The answer is NAND flash memory, the exact thing SanDisk makes.
Think about what AI actually needs. You've got massive training runs, billions of parameters, inference happening at scale 24/7. All of that data has to be stored somewhere, and it has to be retrieved fast. AI data centers started with hard disk drives, the same spinning magnetic disks that have been around for decades. They filled those up. Then they turned to enterprise solid-state drives, SSDs, which run on NAND flash memory, SanDisk's core product. Cloud and data center revenue for SanDisk grew 123% in a single year. 123%. NAND flash, which the market treated as a cheap commodity for years, just got reclassified as strategic AI infrastructure. And when that happens to a product, the company that makes it gets re-rated overnight. But it's not just demand. The supply side of the story is what's really sending prices into the stratosphere. NAND flash prices rose 246% in 2025. Then another 85 to 90% in Q1 of 2026 alone. And analysts are calling for another 70 to 75% jump this quarter. Why? Because supply simply hasn't kept up. Kioxia, one of SanDisk's key manufacturing partners in Japan, announced in January that its entire NAND supply for 2026 is already sold out. The whole year, gone. SanDisk responded by raising its own prices 10% on April 1st, and the market didn't push back because there's nowhere else to go. The result? Gross margin guidance above 65% for the next quarter. That's a number you'd expect from a software company, not a memory manufacturer. Let's talk about what this looks like in the actual financials. Last quarter, $3 billion in revenue, up 61% year over year. Non-GAAP EPS of $6.20 against a consensus estimate of $3.54. They beat by 75%. For next quarter, management is guiding for $4.4 to $4.8 billion in revenue. That would be 45 to 58% sequential growth in a single quarter. And on earnings day, April 30th, which is less than a week away, Wall Street is modeling 4,740% EPS growth year over year. That number is not a typo. Base effects from the spin-off plus the velocity of this upcycle make it mathematically possible. Full-year EPS estimates sit at $44.50. For fiscal 2027, analysts see that number more than doubling again.
Okay, so here's the question everyone's actually asking. The stock is up 3,000%. Is it too late? Bank of America, $1,080 price target. Evercore ISI, 1,200, the highest on the street with an outperform rating. Wells Fargo just bumped to 975. The stock is currently trading around 943. So the highest analyst on Wall Street still sees 27% upside from here, after a 3,000% run. And here's what makes that even more interesting. On a forward PE basis, SanDisk trades at 32.9 times earnings. Western Digital is at 38.8. Seagate is at 40.4. SanDisk is actually the cheapest of the three on that metric, even after this run. That's the bull case in a nutshell. Earnings are accelerating so fast that the stock is getting cheaper relative to earnings even as the price goes up.
Now let's talk about the risks. Number one, memory is the most cyclical industry on Earth. It has always gone from shortage to oversupply. Today's 65% margins could be 20% margins in 18 months if that cycle turns. Number two, SanDisk walked away from a $63 billion fab expansion in the US last year. That means they're almost entirely dependent on their manufacturing joint venture in Japan with Kioxia. One earthquake, one geopolitical flare-up,
One partnership dispute. That's an existential risk. Number 3, China. New export approval requirements that kicked in January 2026 add regulatory headwinds and could cut SanDisk off from a massive consumer market if things escalate. And number 4, the stock itself. Chasing a stock that's up 3,000% into earnings is not a risk-free trade. A beat paired with a soft guide on April 30th could absolutely trigger a violent sell-off, even with the long-term thesis intact.
Here's the bottom line. SanDisk is not a meme. It's not a bubble, at least not yet. It's a company that found itself sitting on exactly the right product at exactly the right moment in history, when AI went from needing compute to needing storage. April 30th is the next major test. Watch for 3 things: revenue inside the $4.4 to $4.8 billion guide, gross margins holding above 65%, and most importantly, what management says about forward order visibility from hyperscalers. That last one will move the stock more than any headline number. I want to know, are you holding SNDK into earnings or waiting for the dust to settle after the print? Drop it in the comments. As always, this is not financial advice. If this breakdown was useful, hit subscribe. And thanks for watching.